So very warm welcome and good morning and Ramadan Kareem to all of you. Today's topic is such an important topic. Everyone we meet asks this question invariably. What if, what if I take all my salary out of profits? Or what if I take profits in the form of salary from my company? Or how much salary I can take from my wife's company? Or we are three partners, we have not been taking salaries, but can we start taking salaries now that the corporate tax law is coming in UAE? And this is such a question that wherever we go, we are normally asked this question from almost all our clients. And UAE, in fact, is in such a unique position that UAE has implemented the corporate tax. The law as it stands is called corporate tax. In the rest of the world, it is called income tax. So there's such a unique position for UAE that your salary will be deducted out of your profits from the company while your salary is not being taxed at a personal level. So this becomes such an important question for everyone in order to optimize their tax liability. And it also reminds me of very interesting quote from someone who said that those who say it is not personal, it is just a business, are lying. All businesses are personal and best businesses are very, very personal. You can imagine this from, some of the businesses that you are running, or for, you can try to think of Elon Musk and take it away from, Tesla, or Dhirubhai Ambani from Reliance. You can see that if you take away the leadership in the company, it impacts the organization to a great extent. And you cannot even imagine that. It is very hard to imagine some of the organizations without their key leaders. And this is also realized by the tax authorities here. And with that, there has been certain guidelines that were issued by UAE corporate tax authorities, FTA. One of the guidelines that was issued was in October 2023, which was a transfer pricing guidelines. And there is one recently public consultation document was issued based on the OECD, which is on 15th of March. Transfer pricing is a topic which impacts every single organization, be it a small organization or a mid-corporate or a large corporate, be it a consulting or an industry, be it a proprietorship or partnership. This particular topic impacts almost every single organization. As many organizations operates with multiple entities, and they have to deal with the TP rules and the documentation that is required as per the TP rules. We can safely say, if the elephant in the room of corporate tax is transfer pricing, the nose of the elephant is the managerial remuneration. And this, that's why we have decided to conduct a separate dedicated webinar on this particular important topic. And today we have with us my colleagues Karishma, Prateek and Harshita. They will delve deep into the guidelines that were issued and the kind of documentations that you have to take care in order to comply with the guidelines and satisfy the tax authorities. And before we get into the details of the topic, I'll have to do the ritual and walk through some of the basics that we always do. If you can go to the next slide, Karishma, normal disclosures to start with. Can you go to the next slide? Yeah. We have been able to develop a strong team covering various aspects of taxation and international taxation and transferring. We are a team of now 8 chartered accountants within corporate tax. And apart from that, if you can go to the next slide, Karishma. Karishma, if you can go to the next slide. The slide is not moving. Apart from that, the firm has got the teams across various different departments, be it licensing, be it VAT, be it compliance, accounting, corporate finance, and audit. So we have evolved as a firm providing spectrum of services, both from strategic finance as well as operational finance perspective. Usual disclaimers, that the advice that we provide during the course of this webinar may not be specific to your business. And this is this is very generic. If you have any specific queries, you can reach out to us separately and we'll try to answer them. If you go to the next slide. Yeah, we have been conducting series of such webinars and seminars and trainings across different topics. Most of them are available on our YouTube channel as well as on our LinkedIn. You can go and revisit those presentations or videos whenever you feel yourself comfortable around it. Also, in addition, we have been publishing certain opinion piece on various important topics on corporate taxation and taxation, international taxation, which has been picked up by the leading newspapers. You can visit those online through those newspapers links, which is also provided on this slide. So this was very generic introduction. I leave the floor now to my colleagues Karishma and Harshita to take it forward with the details when it comes to transfer pricing and the managerial remuneration that impacts your organization. Over to you, Karishma. You need to unmute, Harshita.
Hello, everyone. Thank you, Prateek, sir, for the introduction. Okay, so to start with, we have bifurcated this section into two segments. So the first segment I'll be taking, that is with respect to the basics of transfer pricing and the key terms that are important to understand in transfer pricing. And the second half would be taken by my colleague Karishma. She will be talking about managerial remuneration in detail. Just a quick check. Am I audible to everyone? Karishma, can you please help?
Yes, Harshita.
Yes, Harshita.
Okay, thank you. Okay, so let's start with transfer pricing. As Sheetal sir has rightly mentioned, that managerial remuneration is the most asked question by every individual, by every businessman, and its impact in transfer pricing. But to start with, I believe that it is important to understand what is transfer pricing exactly. So transfer pricing is nothing but a price at which two related parties transact. When I talk about transact, it can be any transaction which is related to the business. So the price at which a transaction has been undertaken between two related parties is called as transfer price. And that concept is transfer pricing. Next slide, please. Okay, so now let's talk about the emergence and evolution of transfer pricing as to how transfer pricing evolved across the globe. So transfer pricing was first brought up by the UK in 1915. Then later on in 1948, OECD, that we was commonly referred to as Organization for European Economic Cooperation and Development, was formed, which was then converted into today what we commonly call as OECD, that is Organization for Economic Cooperation and Development. Then over the years, various legislation, various studies and reports have been published by UN, OECD on transfer pricing. Then in 2001, India introduced transfer pricing, and now in 2023, transfer pricing was introduced in UAE along with the UAE CT. Next slide. Okay, so as I discussed, that transfer pricing related to the price at which a transaction has been undertaken between two related parties. So it is important to understand who all would be covered in under related parties. So if I talk from the perspective of a natural person, or you can say from an individual, then individuals that are related up to fourth degree of kinship or affiliation are covered under the definition of related party. Now, to understand what is kinship and what is affiliation is important to understand who all are transfer pricing from the perspective of an individual. So the individuals that are connected up to fourth level of blood relationships are covered under the definition of kinship. To explain kinship in a better way, I would request Karishma to take me to the next slide. So if you have a look at this slide, and if I talk from the perspective of an individual, then the first degree of relative of the individual is obviously the parents and the children. The next degree goes on to the grandparents, siblings, grandchild. The next degree, that is the third degree, is for the great grandparents, uncle, aunts, niece, nephews, and so on. And the fourth degree is the great great grandparents and great grandchildren, etc. So all the relatives that are covered under these four level of kinships are included in the definition of related party from the perspective of an individual or a natural person. Previous slide, please. Okay, so for a judicial person, any person is considered as related party to a judicial person if the person is holding 50% or more of the ownership interest or the voting right in the judicial person, or where one person is holding 50% or more of the voting right in two or more judicial persons. Please note that this ownership right can be either directly, indirectly, or through another related parties. Then one another important point with respect to related party is control. So two or more persons are considered as related party if there is a common control. Now, what is control? Because if the definition of control is not defined, then the definition may be different for different people. So therefore, the city has defined control. If I talk about control, control means 50% or more of the voting right, 50% or more of the profit sharing, 50% or more of the appointment of board of directors, and having significant influence over the code of conduct of the business. So if any of the four things are there, we can say that there is control. And if there is control, then that is included in the definition of related parties. Other than this, any foreign PE or any PE in UAE, that is any permanent establishment of any organization, or you can say partners in an unincorporated partnership are also considered as related party. And if there are trustees, founders, or beneficiary to a trust or a foundation, then they are also considered as related parties. Next slide. Yeah. So along with related parties, there is also this term called connected person. So transfer pricing is applicable to all sort of transactions that happens between related parties and connected persons. Now we have already seen what is related party. Now, if I talk about connected person, it simply means that any person that is connected to the related party. So in this case, if I talk from the perspective of an individual, or you can say a sole proprietor, then for a sole proprietor, the individual himself, that is the sole proprietor, and the related party of the sole proprietor are considered as connected person to the business of the sole proprietorship. If I talk from the perspective of a company, then the director of the company and the related party of the director is also considered as connected person to the company. And if I talk about partnership, then the partner himself and the related party to of the partner is also considered as connected person to that partnership. Next slide. Okay, so in transfer pricing, we say that the transaction between two related parties must be at arm's length price. Now, what is this arm's length price? Because the entire transfer pricing is revolving around this very, simple concept of arm's length price. I guess many of us must be, must have done this one arm distance in the childhood, as can be seen in the picture. So this arm's length principle is nothing but a price at which the transaction would have been undertaken in an uncontrolled situation. I'll explain it with the help of the example on the next slide. Okay, so if you see the first example, this company A has purchased a furniture from company C, which is an unrelated party. So this transaction is an uncontrolled transaction because both company A and company C are unrelated. They are not related or connected in any way. So we assume that whatever price at which they are transacting must be the market price. In the present case, this is AD 500. So now this AD 500 is my arm's length price because this is the price which is not influenced by any relationship or by any other matter, any other subject matter. So if the company A has transacted with company B, which is a related party, then what is important here to note that this transaction with a related party should be also undertaken at a price at which the transaction has been undertaken with an unrelated party. For instance, if this piece of furniture, if it's the same piece of furniture that is being purchased by company A from company C at 500, then it must have been purchased at a similar price, that is either AD 500 or any lower price by company A and company B. However, in the present case, as this transaction has been undertaken at 80,000, which is almost double the price that company A is paying to an unrelated company, this transaction cannot be said at arm's length. Now let's take another example. So in this example, company A is paying KMP salary to two persons. Both of them are on the sales manager post, and let's assume for once that both possess the same qualification and everything. One is relative and other one is non-relative. Now company A is paying same salary, that is 50,000 per month, to both of these sales manager, irrespective of the fact that whether one is relative or not. So this transaction can be said to be at arm's length price, because the price at which company A is paying to this relative sales manager, that is 50,000 per month, it is also paying the same price to a sales manager who is non-relative. So this is called as arm's length price. To sum up, arm's length price is nothing but a prevailing market price at which the transaction would have been undertaken if no controlled situation would have been there. Okay, so we understand what is transfer pricing, what is related party and connected person, and what is arm's length price. Now, what is important in transfer pricing is to prove that a transaction between related party is at arm's length price or not. For the purpose of that, some methods have been prescribed by the CT, which can be used to benchmark the transaction to prove whether it is actually at ALP or not. So there are two kinds of methods. One set of methods are based on transaction. It can differ from transaction to transaction. And the other set of methods are profit-based method. We test the overall profit of the entity. So the transaction-based methods is comparable uncontrolled price method, which is commonly used as cup method and is a widely used method. The another method is a cost plus method, which basically works on a cost plus model where you just add in cost and add a certain markup to it. And another one is a resale price method, which is generally used in trading activities. If I talk about profit methods, there are two types of methods. One is TNMM, which is broadly used in service industries. It tests the net profit of the entity. And the another one is transactional profit split method, where you split the profit according to some rationale. So these are the 5 commonly used transfer pricing methods that are being prescribed by the law and are important to benchmark the transaction. Next slide, please. Okay, so now what are the consequences? Okay, I think Karishma, did we missed on a slide? Okay, so now let's talk about transfer pricing documentation. So there are two kind of compliance requirement. One is master file and another one is local file. The conditions for the applicability of both master file and local file are same for, that is, that I think the law has kept it same for the easier understanding and compliance. So if the total revenue of a multinational group, the consolidated revenue of a multinational group exceeds 83.15 billion, or if the revenue of a taxable person exceeds 200 million, then in that case, both it is required to both maintain transfer pricing master file and local file. And these documents are required to be submitted within 30 days upon request of the tax authorities. Next slide, please. Okay, so there are some consequences of non-compliance as well. So if a taxpayer doesn't comply with the arm's length principle or doesn't maintains the document, then the possible non-compliances could be potential TP adjustments in the future, which could eventually lead into increased tax rates for the business or increased tax burden on the business. Another non-compliance is the potential loss of 0% corporate tax rate for the free zone businesses. And there could be potential penalties as well that could be imposed by the act in the future. Okay, so now we have talked about almost everything as to what is transfer pricing, who all are related parties, connected persons, methods, LPN, etc. Now let's talk about transactions, on which transfer pricing applies and on which transactions it doesn't apply. So it's very simple. All kind of business related transactions, be it purchase sale of goods, be it purchase sale of fixed assets, or be it any financial transaction, loan, interest, etc., any royalty payments, any cost contribution arrangements, be it KMP remuneration, in all sort of business related transaction, if they are between related parties, transfer pricing is applicable. Next slide, please. Okay, so now the basic portion of transfer pricing has been covered. Now my friend Karishma will talk about managerial remuneration. Over to you, Karishma.
Thank you, Ashita. Thank you so much for summarizing the transfer pricing, basics about the transfer pricing in such an important manner. Now, as discussed by Ashita as well, today's important aspect that we will be covering, or the webinar would roll around, is with respect to managerial remuneration. Now, as discussed earlier as well with by Sheetal sir as well, that stating managerial remuneration becomes a very key important aspect for every business, be it a sole proprietor company, be it a partnership, be it a free zone company or an LLC company. Everyone has been distributing the everyone has been distributing the salaries to their managerial, to the key managerial person. Now, what may be considered, or who all will be considered as a key managerial person, based officers, the chief finance officers, the managing directors, any senior council members or other board council members, company secretaries, any managers who are working within your organization are considered as a key managerial person. In fact, the people who are directly or indirectly taking the ownership or taking any management decision for your company would be considered as the key management persons. As you distribute the salaries or you distribute any remuneration, not only in the name of salary or remuneration, but it can be in the form of director fees or any other kind of fees that you are being paying to them, all this would come under the definition of a managerial remuneration. Now, these kind of payments, when they are being undertaken and when you give these kind of remuneration of fees or salaries or whatsoever name you define it, whenever you are paying this to any related parties, as discussed by Harshita earlier, that to all those people, when these are being given, it would come under the transfer pricing ambit. And you have to identify that when these payments are being made, this should be at arm's length principle. So coming to the next slide, as I would explain that every company would have this, every company, even a sole proprietorship or a partnership would have this key managerial person, and you would be distributing salaries or remuneration to them. So when you pay these to any of the companies, that would be considered as your deductible expenditure. Now, to give you a very important bifurcation when it comes to a sole establishment and when it comes to company is, if you are a company or if you are a free zone company or an LLC company, whatever remuneration you would pay or in the name of the salary or any other kind of allowances, that would be treated as an allowable expenditure for your company while determining your taxable income, only till the time that the remuneration is being paid is at arm's length price, that payment you are being doing. So if the payments are not within the arm's length price or not within the arm's length principle, then the excess payment or whatever payment you are giving to the key managerial person may be disallowed if it is not within the arm's length principle. So it is very important to understand and get a actual figure or get a complete analysis of what would be an arm's length price or what would be the ALP where I need to pay the salaries or remuneration to my KMPs. Now, when it comes to a sole establishment or a sole proprietorship company or even an unincorporated partnership, key important aspect to understand between that part is there is no different liability or there is no distinguishment between the company or the owner of the company, as a sole establishment or proprietorship is 100% owned by a single person, and there is unlimited liability that comes when it is a one person company or when it is a sole establishment. So the law very specifically has determined that whenever there is any remuneration or any other kind of amounts that is being withdrawn from a sole establishment or a sole proprietorship by owner himself, that would not be considered as an allowable or a deductible expenditure while calculating your taxable income. So the moment you are into the sole proprietorship or a sole establishment, any kind of amounts that you've been withdrawing would not be allowed as a deduction. But within the company, of course, it will be allowed. It should be at arm's length principle. That is to determine that there is a fair tax treatment that is being provided to the other individuals and of the company and the organization as well. Coming to another part, like when I say that it should be an arm's length price, what do we mean? Now, arm's length price as risk. So, as I was saying that when it comes to benchmarking, as explained, benchmarking would be an important aspect when it comes to transfer pricing to derive an arm's length price. So what are the important factors, or what would be an important approaches we follow while determining the benchmarking would be, what are we benchmarking? As in this, as explained that it will be the key managerial person. So why do we want to do the benchmarking? As the concept is quite clear that benchmarking, it needs to be done so that there is, whenever the transaction is happening between a related party and it should be on a similar line of business, and it should be as per the market practices, and that the related party influence should not impact the business profits or the taxability of the company. So the benchmarking process would be quite simple. First, we need to plan, we need to identify the transactions. As in this case, as we have to do benchmarking of key managerial persons. So we'll identify, we'll collect all the information that would be required, and then conduct the benchmarking for the key management person remuneration that you would be providing. Now it becomes very, very important to understand that why is the benchmarking important? Very, very easy to understand that it becomes easier when you do benchmarking. If at any time the authority knocks your door and say that what is the basis for providing or making any kind of salary that you're doing to your KMPs, we have our studies ready, we have our documents ready stating that this is the document supporting for us, where we have done the benchmarking based on the industry standards, based on the expertise, based on the qualification and everything of the owners or the KMPs of the person, and that would back up the payments or give an authenticity of the payments that we are doing. So because of the compliance, as explained by Harshita earlier, that documentation would be required only when the taxable revenue of the company exceeds 200 million of any company which is located in the UAE. But it also states in the law that at any time, if the authority feels, they can ask for the documentation or ask for any kind of details from any other persons whose revenue is not exceeding 200 million. So better we maintain all these documents beforehand, instead of getting into the complexities or getting into the penalties or anything that may be levied. So because of that, the benchmarking becomes very easy, very important when it comes to compliance part. It of course helps for decision support and risk mitigation and transparency between the companies or between the employees of similar or same position within the organization. So that becomes an important aspect when it comes to benchmarking for KMPs within your organization. Now, when we say that benchmarking needs to be done, there are of course certain challenges which comes along with it. So some of the challenges which can be faced by every organization would be, there could be lack of data availability which can be there in the market. Now, as we know that transfer pricing is very new to this environment. There was earlier people had been not much used to about any compliances, or even taxes were not that much strict over the year. But over the years, now UAE has been leaving the laws and making the laws quite stricter, and compliances have been increased. So certain times there may be situation where we don't have proper documentation that are being maintained from earlier years, and proper data may not be available to do the benchmarking. If we say today certain person is the owner of the company, so what is the basis we have been giving him salary for earlier years, and what we have to do it now or give as per the industry standards, that may be one of the challenge where we may face while determining the ELP for KMP remuneration. Other than that, the industry standards, as it is new to the market, to determine what data would be available, as there are softwares or any other metrics that are being used for the benchmarking. Sometimes it may become very important. It may be not possible to gather all the information based industry to industry. Some is based on the industry. Then that becomes a challenge when we do the benchmarking for any kind of organization that we are working around. The documentation, of course, transfer pricing documentation will be required only in case where the revenue exceeds. But apart from that, the people, every organization, it is recommended that we maintain at least few of the documents at our end so that we don't wait until the event. So detailed information regarding how we are paying the remuneration to the KMPs, the contract the contract needs to be maintained. Any other kind of agreements that we have between the KMPs, that needs to be maintained. And the benchmarking, of course, would add on to the supportive document for it, stating, okay, this is the document which suffices or which of the payment that we are doing to the KMPs. And if any justification is being asked by the authorities, we should be able to provide those as well. So accordingly, the KMP documentation becomes an important aspect. To summarize in a any short manner, like as explained by Harshita as well, the transfer pricing becomes an important factor for so many transactions that are being undertaken between the intercompany or intra-company of the same group. So we need to identify what are those transactions. Then we need to do an functional asset and revenue analysis between those. Then the transactions, identifying those transactions, what would be the most appropriate method to levy the transfer pricing and do the benchmarking for levy or to derive an arm's length price for those transactions that are being derived. Then any adjustments, if it is being required to be recorded in our books of accounts, that needs to be done. Proper documentation, proper documentation at your end, maybe in a hard copy or a soft copy, in whatsoever manner the company may determine. And then any kind of written filing, if it is being required, that needs to be done. So this is in a summarized format what would be the entire transfer pricing process. And when it comes to managerial remuneration, as we discussed, it becomes very important to maintain all the documents to do the benchmarking. Maybe we may not have the complete accurate data or the correct salary that may be given, but at least the range can be derived if we do a proper benchmarking. So yes, with this, we would like to end today's session. We are open for any question answers that you may have with respect to KMP remuneration or any other kind of any other similar questions that you may have. We'll be happy to answer. So now I'll hand over to Pratik sir to have any Q&As that are being there in the Q&A session, or people may ask it.
Sure. Thank you so much, Karishma. Very nicely presented, and I hope a lot of clarity has been obtained because of the managerial remuneration ambiguities. So first of all, before asking what is there in the Q&A, just want to understand if one company is entirely owned by me 100%, and if I'm drawing salary from both the companies, do they need to be benchmarked, or do you feel that those salaries can be determined because it is my own company?
So to answer that, sir, as I explained earlier as well, that if it is a 100% owned company by me, and if it comes under a sole proprietorship, then you are not even allowed to withdraw the salary, because there is an unlimited liability when it comes to a sole proprietorship business. So even if you do the benchmarking, but the salary, whatever you withdraw, would not be allowed as a deductible expenditure while calculating your taxable income. But the moment if you are going to a company, if you are 100% owned company, then benchmarking depending on the circumstance, but depending on the organization structure that you are having. So even if you're 100% owner, but it is an LLC company, at that time, there is no unlimited liability that comes to you. At that point of time, yes, the benchmarking would be required.
So merely just holding 100% in a company doesn't make it a related party, right? If A company is 100% owned by me and B company is 100%, because that is one of the questions also asked by Bala sir, which says that Mr. X owns 100% shares in company A and company B. Are these companies by virtue just because of ownership related entities, or there have to be transactions which determine that they are related or not related?
So to answer this, both these companies are related entities because Mr. X is the common holder and he owns 100% in both these entities. So Mr. X is a related party to company A. Mr. X is a related party to company B. And because company A and company B have the shareholding of Mr. X 100% in both the entities, therefore company A and company B are also related. So any transaction that happens between either company A or company B or between them, it would come under the purview of transfer pricing.
Excellent. Thank you so much. And I hope that clarifies the answer. Thank you, Harshita, once again. So,
Yeah.
again, Karishma and Harshita and Sheetal sir, one question asked by Chetanji. Do we have to submit the information about connected person to tax authorities while filing the return? Has there been any clarifications on the same yet?
So to answer that, I would say that Mr. Chetan, as I explained earlier as well, see, as on date, it has been just specified that the documentation or any other kind of written filing or any submissions of the document needs to be done only in case if the revenue of your company is exceeding 200 million dirhams. Until and unless the authorities would ask you for any information, you may not be required if your revenue is not exceeding 200 million dirhams. But it has been also specified that if any time the authority knocks your door and asks you for any information, then you may require to submit. But as on date, it is only being specified that if your revenue is exceeding 200 million, then only you need to submit and do any kind of documentation support that will be done in the form of a local file and master file. So I hope it clarifies.
Excellent. Excellent. Thank you, Karishma. In fact, few of the people have asked the same question whether keeping documentation, because I'm not exceeding 200 million dirhams of turnover, is required or not. So obviously, it is law is very typically worded. At one place, it says that authorities may ask if they need to, but at one place it says that 200 million dirhams is the turnover, right? So as per the prudent guidelines and as a firm opinion, we believe that you should do the benchmarking. However, master file and local files are something that you do not need to mandatorily maintain, but definitely you should keep the benchmarking done for all the kind of transactions, specifically managerial remuneration as well. Coming towards one important question: how does the benchmarking of managerial remuneration works? Right, these are 4 and 5 people have asked the same question, and I would just ask Karishma and Harshita to explain in a little detail, because it's very and honestly, it's not right way of just asking the market. So how does the benchmarking of these remunerations will work and will be acceptable to the authorities? Because like Sheetal sir mentioned, personal income tax is not there, right? So how will it be acceptable? Because globally personal income tax is there, and that is taxable, hence there are no ambiguities. But whether the same application will apply in UAE as well? Over to you, Karishma and Harshita.
So there are few ways of benchmarking managerial remuneration. One of the way could be that if a company is giving salary and there are two similar kind of employees, which we have already covered in one of the example of ALP, that if two employees are of same level and we are paying similar salaries to both of these people, then we can benchmark it using CUP, that is comparable uncontrolled price method. Another way to benchmark is by taking data from the public and from the industry. So there are various softwares which are available in on which data can be extracted as to exactly what type of how much amount of salary is being paid to a particular person who has so designation, or maybe has started a business according to the exact qualification of that person. Another way is to take quotations from the market as to if you're looking for a particular person but with so qualification, then what exactly is the salary that is being paid in the market to that kind of a person. So these are just various ways in which we benchmark managerial remuneration. However, the circumstance of benchmarking it for one company might differ from that of the another company, because transfer pricing is very subjective and facts oriented. So what is correct for company A might not be correct for company B.
Thank you so much, Harshita, for the clarity. But like you mentioned, I firmly believe that there is no right or wrong method as such. What needs to be done is taken a right approach towards drafting the contract as per the quotations received, or through the software search, that what does that person actually deserve as per the work that he's been doing. So next few questions, and I'm unfortunately, probably because it is not of manager remuneration, I'm avoiding. But there are few more questions that says that will there be any penalty if a certain amount is disallowed as managerial remuneration. So I definitely there will be disallowance and there'll be penalty. But over to you, Karishma, to clarify on that.
Sure. So to answer that, I would say that, okay, instead of penalty, what is being seen in the other part of the world as well, instead of leaving any kind, of course, there would be penalty. Along with penalty, whatever remuneration you have already allowed or taken as a deductible expenditure while calculating your taxable income for any respective year, starting, of course, from the year of applicability for you, that may be added back to your taxable income, and whatever tax liability would have been determined, if that would have been the part of your taxable income, will be calculated. So of course there will be any penalty as well as the tax liability that may occur if you're considering it as the expenditure. So this would be the case where you have first taken as an allowable expenditure, and then if it is disallowed, that may be the concept that you have to follow, and tax liability as well as penalty you'll be liable to pay.
Thank you so much, Karishma, for the clarity. Uh, One more question, in fact, two more questions. If company A is 100% owned by me and has also 49% ownership in company B, does it still qualify as related party? Over to you, Harshit.
So as in one company, the ownership is only 49%, which is below the minimum threshold of 50%. Directly, both of the companies would not be considered as a related party. However, there is this point of direct, indirect control with another related parties. So if let's say in company A, which is 50% owned by Mr. X, and company B is 49% held by Mr. X, and let's say 10% held by Mr. Y, then in that case, the hold of Mr. X and his wife in company B accumulates to more than 50%, then in that case, both of them will be considered as related parties.
Excellent. Thank you so much, Harshita. Question for Karishma and Harshita. If three shareholders from the same family comprise of 100% of the shareholding, are all the three shareholders directors allowed to take remuneration?
So with respect to allowability of expenditure, it's not that it is being disallowed. It is you can take the remuneration that you're withdrawing, you can allow it the expenditure, but the only concept in that case would be it needs to be at arm's length price. So that is the only important factor that you will have to determine and say that if you are the owners and the directors or shareholders of the company, you can withdraw, keeping in mind that whatever salary you are withdrawing, it should be at arm's length price, and it should be benchmarked whatever salary you are withdrawing from your own company as a director or owner or as a manager of the company. So I hope that clarifies.
Yeah. Thank you so much, Karishma. Uh, I think we have one question, and it's from Preeti that says, we are a trading company as white labeled, and our price for the product is 10 dirhams, say, per piece. Now we are going to have a distributor model who will sell in our brand. So what's going to be the pricing for this? It has to be at the same price, or it has to be benchmarked at other price. So Preeti, unfortunately, this is again not related to managerial remuneration, but definitely the transaction that happened has to be benchmarked to a level which is fair to the market. It cannot happen that you're doing 10 dirhams as yourself and 8 dirhams via distributor. So there has to be a proper benchmarking. But anything, Harshita and Karishma, if you feel to add to this, happy to consider this. But as mentioned, we'll be running through a lot of series of webinars on particular transaction specific to transfer pricing. And probably next of the webinar will cover this topic as well. But yes, as per my understanding and your question, it has to be either at 10 dirhams or properly benchmarked to the market standards. Harshita and Karishma, over to you if you want to add anything else.
I just wanted to add one small thing, that transfer pricing applies to transaction between related parties. If this distributor is a related party to your company in any way, then this transaction needs to be benchmarked. It will be covered under the transfer pricing embed. And if the distributor is an unrelated company or a unrelated person who's not related to the business and a general business vendor, then transfer pricing would not apply to
Doesn't.
this particular transaction of distributorship. However, if there are any other transactions, other related party transactions where, let's say, one of the distributor is a related party and the other distributor is not a related party, then we have to obviously see the price at which we are billing to the non-related distributor as well, because that might impact the transaction that we are doing with the related party vendor.
Excellent. Thank you, Harshita, for clarification. And I think we have just few more questions, but uh, Bala sir has asked, is there any online tool for benchmarking purpose? So Harshita, if you can, give a brief
So
about the tools.
there is
Yeah,
no general, online tool which is available to the public for the purpose of benchmarking. However, there are few transfer pricing softwares that are available on subscription model, which is used for benchmarking. But then there are detailed search procedures and everything involved in that software.
perfect. I think that helps, and we have no more questions. So thank you so much, Karishma and Harshita, for a valuable and informative session, and thank you, Sheetal sir, for the background. I understand that the elephant in the room has to be transfer pricing when it comes to transactions related to connected persons, or transactions related to related parties in the group, within the group, outside, globally, and we'll have to benchmark it as per the standards. So thank you so much for an informative sessions, and I hope that everyone who's joined today, will also join for the series of webinars on transfer pricing that we will have. Uh, Over to you, Karishma, and thank you so much.
Thank you so much, Harshita. Thank you so much, sir. So, yeah, I would like to just thank everyone for attending the webinar, and we would be covering more such aspects as mentioned by Pratik sir as well, very specifically covering up the topics, as transfer pricing is a very broad concept. Everything may not be covered in just one webinar. So eventually we will take one by one line item of the transfer pricing, and we'll be conducting webinars. So we'll share the presentation as well as this recording for all the attendees of the webinar. And thank you again, everyone, for attending it. Hope it was helpful for any kind of questions that you had in the webinar. Thank you. Thank you so much, everyone.